We all know that organic content marketing and SEO is one of the most important growth channels for SaaS today. It's a real struggle for most growing SaaS companies to find the internal bandwidth to get all the content done that you need for your SEO. Plus, how do you prioritize your actions to get the fastest path to results? The trick is finding the right agency to partner with. And that's why today's sponsor is Flying Cat Marketing. I really like the way they approach SEO and content marketing. They're full service and they have content experts, technical SEO experts, and a team of absolute rock stars. But what I really love about their approach is the following. They have a process for working with internal experts so their content sounds like it's written in-house. They follow a proven framework, which means they get results way faster than any regular in-house team. And they do everything. They don't just provide you with the strategy and let you figure it out. They actually execute it for you and hold themselves accountable for results. Plus, they know B2B SaaS, which is what we're talking about today. Their clients include ActiveCampaign, Mixmax, Hotjar, and many other big names in SaaS. If you're ready to dip your toes into SEO and content marketing, please speak with them today at flyingcatmarketing.com. Hello, everyone. This is your host, Akil Jabbar, and welcome back to another episode of SaaS District. In today's episode, we'll be talking about moving up market in the SaaS world. Today, we have our guest, Andy Stinnes, joining us. Andy is a general partner at Cloud Apps Capital Partners, a market-focused VC firm specializing in cloud business application companies. They partner with entrepreneurs at the very early stages to build global category-leading companies. Andy is responsible for developing investment strategies, sourcing and leading investments, and serving on the board of portfolio companies. He's an expert in business software applications, business networks, enterprise class, product strategy, and go-to-market. So welcome, Andy. Super excited to have you on the show today.
Thanks, Akil. It's good to be here.
So lots of interesting stuff has been happening this year, right? I mean, I'd love to kind of start before we dig into kind of going up market, about the current market when it comes to investing in, the SaaS applications, the cloud market, with obviously public markets going down, investors holding back or rethinking their strategy. What's your kind of current position as a VC firm, both in the short term for, let's say, 2022, and then maybe, thinking long term ahead as well?
Yeah, absolutely. And, what a crazy market it's been, right? Over the last 2 years for sure.
Definitely.
Maybe cut to the answer first. We think it's actually a great time, great market for investors in SaaS. I mean, we think the cloud market in general is a great thing. And, never mind sort of the ups and downs of the moment is the long-term proposition is a wonderful place to be and to invest and to build companies in. But maybe just for a little bit of context, let's not forget we had the longest running bull market. This market is known for its sort of ups and downs on a somewhat of a regular cycle, but this has been a long one. And the last 2 years, like I said, were particularly crazy, right? And honestly, as a firm, we've been sort of sitting here for a while expecting that it's time for a change and for a correction.
Yeah.
IPOs on fire. I don't need to retell the story. Lots of non-traditional investors coming in the last year, 2 years.
Yeah.
And really amping up valuations around sizes, particularly towards the late stage investments, where sort of the time to IPO, time to exit was short enough that you can kind of set the clock for it and expect that IPO window still to be open and lucrative for you. Mm-hmm. And as a result, valuations kind of doubled in cloud specifically over the last 2 years at the late stage. Interestingly, when you look at early stage, which is where we're investing, it's not as pronounced. They were up, but more like 40% or so. And that's simply because at the early stage, you're so far away from an exit, right? At the time, you're talking 6, 8, 10 years to maturity, to public scale. Yeah. And God knows what the market will look like at that point. So it's a little different in the early stage, but still, clearly it's been somewhat dislocated. Lots of folks moving earlier. And as a firm, we've actually been sitting pretty conservatively and not made many investments.
Okay.
For example, in 21, we made just, I think, one single investment, just because it was not a particularly good market as an investor, as overvalued as things were. So, fast forward 6 months, here we are, and the world has changed quite a bit, which I think is actually good news. Good news certainly for us as investors, because valuations are down, things are a little saner. The process is more healthy, right? You can actually take your time to get to know founders and their business ideas and build a real relationship and not just rush through, from 2 weeks from get to know each other to term sheet.
Exactly.
And the other side of this is, a downturn like this is actually the time when a lot of great companies are being born, right? If you go back in history, a lot of the all-time, most successful SaaS companies were actually started, in 2007, 2008, 2009, for example, and a time when things were not that great. So, because in the early stage, and that's a whole other chapter we can talk about, you don't necessarily need that many customers. You don't need that much funding, right? So you just need time from your customers and from your investors, and that's what folks have right now. So it's a great time to be investing, and we're super active again, and will be for some time to come here, and we're excited.
Yeah, absolutely. I mean, we've been in the same kind of position with you in 2021. I think we were the same at Horizon Capital. I think we did one investment, but initial of this year, we were kind of, rocked by what was happening. We were going to just more of the uncertainty, but now that things have kind of settled, I think we're definitely more excited and, to get into doing more deals because exactly that was just, I felt overvalued, overhyped. People were just asking for way too much, and it just didn't feel, sustainable to do those kind of deals. But would love to kind of hear, so you said you work with early stage companies. Can you share a little bit more about what does your investment thesis look like? What do you look for in entrepreneurs you work with, and who are companies you don't want to work with, or tell us a bit more about your valuations that you are comfortable investing in right now.
Yeah, absolutely. So we're a market-focused firm. Like I said, we invest exclusively in business cloud, so business software, cloud-based, primarily with sort of an eye to sort of end-user application software. And we lead what we call a classic Series A. Typically, those are around $3 to $6, $7, $8 million in size.
Okay.
That we lead, and we do the majority of the check for, and then we like to build some strong syndicates around us for those rounds. And the reason we call it classic Series A is, if you look at the funding continuum, right? There's lots of angel activity, lots of seed investors who do a great job doing what they're doing, but to build a successful cloud company, you need enough capital to get to sort of a 2 million ARR range, at which stage you can raise from most of the more traditional larger firms, right? So the new age Series A, for example, typically now is 10, 15 million in size. And those rounds typically require 2 million ARR or more, right?
Okay.
So in our view, there's a bit of a hole in the market because the seed check of 2 million or so just doesn't get you there. And then importantly also, seed firms, as a risk hedging strategy, just make a lot of investments, but as a result, they don't have a whole lot of time to help founders. Right. And especially at that early stage, so much company building is being done, and that's where founders need the most help, right? Because nobody knows it all, right? So our thesis is that we kind of sit in the middle as a stepping stone. We do these, what we again call a classic Series A. We have the focus of a Series A investor. We only do about 12 to 15 investments per fund, with 2 investing partners. So we join the board. We have time. We have lots of operating experience. My partner and I both have 20 years each as operators building software companies in various roles and executive teams. So we've done it, seen it. We have a lot of network of SaaS experts that we can bring to bear as advisors, as board members, maybe as hires, and we do that again earlier than your new age Series A, right? We don't need 2 million ARR. We go in 100, 200K ARR as long as we can see it. There's some traction, some validation. We've done investing at inception when we know the founders. So some people would think of it as seed investing, but we don't think of it that way because we are very focused. Like I said, 15 investments per fund. So we have a much more dedicated commitment to the companies we invest in. Okay,
and so you do seed, you also do classic Series A, 2 million plus ARR. Is there specific industries? If somebody's listening in, they say they probably got a business that could be a fit and they want to reach out.
some kind of verticals that make more sense for you guys and you guys like to work with?
Yeah, so I think the best way to describe it, I think, is when we look at opportunities is, again, we have sort of a preference for end user software, right? So we stay away typically from, infrastructure stuff like security or cyber or something like this, just because we don't understand it well enough. And we want to add value in the process post-investment. And for that, we need to kind of understand it. So, but with that frame, it's fairly broad, right?
Okay.
Whether it's sort of CRM, MarTech, sales, whether it's legal or compliance, whether it's supply chain, manufacturing, we've done a lot of things kind of all over the corporate functional spectrum. Okay. The things that we look for the most are, do the founders really understand the domain and the problem they're solving? That's sort of one big criteria for us.
Yeah.
Second one is, who is the buyer title, right? Not just a company, the ICP, so to speak, of companies they sell to, but who's the person in terms of their title, their role, their influence, their budget access, and how relevant is this problem to this particular buyer, right? Is it like the number one problem to that buyer title, or is it the number 12, right? Or the number 15? Mm-hmm. And then is the market large enough, right? Because as you said in your opening, a blurb about us, we invest with an eye to public scale category creating or leading companies. And that works only if you have a large enough global market with enough value runway, if you will, around that buyer title. Like, what are all the things that this person is going to need to be built around the initial proposition so that you can grow ACV with that customer over time. So those are the things we look for. Again, it's not particular verticals or it's not particular spaces per se, but those are sort of the theses, the dimensions of the theses that we have.
Got it. And then so you get to a stage, you find a company that's, you feel is a good investment opportunity where you guys can get involved and you feel you understand at the early stages. Your expertise is obviously also involved in the validating and opportunities to help them go up market, to understand the value of being up market. Maybe can you speak a little bit? Why do you think it's important that they move up market, or they should consider that should be where they should be?
Yeah, so that's an interesting question, right? Because to some degree, I think it's less of you decide whether you want to go up market or down market. It's more of like the dynamics around the problem you're solving, the industry you're solving it in, of what can happen to you, and then navigating that and being ready for it, right? So the way we think of it is there's essentially two sort of distinct models in SaaS, right? One is what we call traditional SaaS, which is more like you start with smaller companies, SMB, mid-market, but you tackle a global problem, a pretty ubiquitous problem, and it can grow and be taken all the way to enterprise. And I'll come back to that in a second. The other distinct model is what we call enterprise cloud, which is where from the very beginning, you tackle large companies, enterprise customers.
Right. Exactly.
And which one is the right one really depends on what is the problem you're solving, right? And who is that buyer title, and which kind of companies do I find a buyer that has that problem of significant criticality, if you will, and scope that you can even sell successfully, right? So just to make some examples, like supply chain, for example, is like a typical top-down thing, right? Because you need large enough companies that really have massive issues with their supply chains that you can enter, right? An example from our portfolio is a company called 4C Risk, which is governance, risk, and compliance. And, from the very beginning, they sell to very large financial institutions, to the chief compliance officer and risk manager, right? To make sure they have the tools in place to deal with that. That's just not something you find easily in smaller companies, right? So enterprise cloud versus traditional SaaS depends a lot on, again, the problem you're solving, and that goes back to the domain expertise of the founders. Right. Now, what's interesting in all the years we've been doing this, when you look at companies that start with enterprise customers, enterprise cloud companies, very rarely do you see them really go down market, even with large success. So think of like a a Workday, or think of a Viva, right? The pharmaceuticals cloud. Super successful companies, crazy successful, but their attempts to go, either they don't try because it just doesn't make sense and they know it, or they try, but they couldn't, right?
Yeah.
Because the culture that gets built, the dynamic around a partner ecosystem, and the way the product is designed, the way the sales organization is designed and works, and 100 other reasons. And that's a whole nother show here on that topic. It just doesn't really happen to go down market. Now, if you go start with small customers, SMB and mid-market, traditional SaaS, then you're much, much more likely to be able to go up market. And I think the way that happens is more of you get pulled up market. It's less of a conscious decision than like, hey, wouldn't it be a good idea if we start selling to bigger customers? It's more of a natural process. So if you think of, let's see, Salesforce is a great example, or Box is another wonderful example, right? Yeah. It's very much started with let's nibble away at Siebel, right? This is the old Salesforce story, right? And then it becomes more of a land and expand, really, right? First, it's small companies and they use it and it's great and it's easy to use and it doesn't have a huge sticker and there's no professional services organization that wants to come in and charge you big dollars to implement the stuff and blah, blah, blah. It's easy, right? It's good. It's good for small companies. They love it. Yeah. And then you find big companies start adopting this more of a departmental level, right? Small teams, they use it. Slack, by the way, is another example of this, right? And then more people see it, and it grows sort of internally from small group to department, and at some point, CIO looks at this, but like, why don't we all use this, right?
Exactly.
And that's the point when the market actually starts pulling you up, and that's a wonderful place to be. It's also one that you need to be prepared for. Okay. Because things absolutely break at that point. Your product isn't designed for enterprise. Enterprise has different needs. Yeah. When you think about the infrastructure on security, the robustness, scalability, the integration into their backend systems, and a whole bunch of stuff like this, right? It will break. I mean, if you trace the story of a Salesforce or a Box, that was certainly the case. We talked to people who've been there through the journey. Like there were, moments of angst where like, okay, we have to kind of rebuild this thing as we're flying. That's the product side. There's the sales side, right? Selling to big companies is different. Exactly. The way they buy, the way they want to be treated, the long sales cycle, complex, much more political, multidimensional, all those things. So you need to retool your organization, you need to retool your product, if your financials actually start changing a little bit. So there's a bunch of stuff that needs to be overcome. There are real obstacles. And by the way, some companies choose not to go there, right? They're like very happy in mid-market and in SMB. But, most of the super category successes that, I keep referencing, they all like saw it, felt it, were pulled and did the work to get there and became super successful that way, right? By the way, so just sort of a little factoid here, we did some analysis. If you look at the Bessemer Cloud Index and look at those companies there, just broadly speaking, there's some mixed forms in there that are hard to categorize, but broadly speaking, about 70% of those companies all started with SMB and went up. Right. And about 20% or so of those companies are like the Workday, Viva types, right? That are basically enterprise cloud companies. And few of them, if any, I couldn't name one, honestly, that really went all the way down into SMB. I think that very
it's definitely a challenge. And I've heard that, when some SaaS companies we speak to who start up market and, they don't get as much traction or growth as they'd like. And then they think, okay, maybe it's better to go, down market to kind of, faster sales cycles, easier to kind of get into the market, get faster feedback. And I think that's probably the biggest reason why people start maybe with the SMB is easier just to get it out and get people using it in the shorter sales cycle, right? But one important point you mentioned, which is, you kind of get pulled up market. And I guess there's certain metrics or certain, checkpoints that maybe start telling you that it's time. What would be some that you think that as a founder, you have to think about and say, okay, look, it's time to transition to up market? One would be kind of, maybe you're just getting more demand and people are reaching, there's more enterprise inbound request, or there's just more requests from your existing customers who need more functionality that are using it, but needed for their, for their entire team. What else would you think would be?
Yeah, I think the number one thing to look at and listen for is just what is the market telling you? Right? Is there that pull that I described earlier? Right? Are you starting to see larger customers adopting, maybe in smaller ways, team-based, departmental, like I said? Mm-hmm. And does that naturally lead to like a sort of growth inside those companies? Mm-hmm. I know from our portfolio, we have some companies that basically run stats on like, okay, how many users do we have at large customers? And how does this user count grow over time as an indicator for them to know like, okay, this is working for large companies and it's better than the alternative that they have used so far. And that word is spreading, right? So I think that's the number one thing to look for, right?
Okay.
I think if you're not certain, you can do some test marketing into the mid market, lower level enterprise, and just see like are they going to take it up to begin with, just reputationally, functionality fit to what they need, and then what is their experience, and what how hard is it for you to service them, and how different is that from your experience?
Yeah.
And I think that will tell you a lot about the market's interest. And then there's a gut check question. You as a founder, your executive team, your board, right, your investors. That's a big step, big decision to let that happen, to go there. And are you ready? Right? I mean, it does change financials, and it just changed the company, and it's a journey, right? You need a lot of capital also to make that happen. So is that the path you want to go, or are you happy in the mid-market or SMB world? And that can be the right answer. It really depends.
Exactly. Yeah, I've actually heard that as well. Some founders who just want to stay product led, they just want to focus on product and just all inbound driven, and they have no desire to be sales led, to build a sales organization, to be doing any sales, and they're okay with that. And regardless of what the market says, they just want to stay in that bubble or circle, and that's okay too, right?
Yeah, absolutely. Yeah, absolutely. Yeah. I mean, think about gross margins, right? So when you have if it's PLG, it's even more so. But even if you have like a inbound inside sales or auto convert kind of business SMB, you probably end up having tremendous growth margins, and you're probably in the upper 80 percentile or something like this. Exactly. And if you, like you said, if you have to put a sales organization, God forbid, a field sales organization together. And a professional services organization, your margins will not look as stellar as they used to. And there's definitely an example of companies that looked at that and go like, nah, not for us. Let's just stay where we are. Market's big enough.
Exactly. And that's okay too. Yeah. Have you seen other kind of differences in terms of like key metrics when people go up market, such as the ARR or the LTV or churn or CAC and other metrics you can share? The difference between those?
Of course, as always, right, it varies a little bit. But I think broadly speaking, what you will see is your annual contract value, your ACV will go up, right? Larger customers, larger tickets, once they commit and they want to do this for real, then those are big deals. Mm-hmm. Your churn will actually improve. Right. So enterprise customers are much more sticky. They don't go out of business, or at least not as often as SMBs, right? So a lot of the churn in the SMB level, where you have like 15, 20% churn or so, is just small companies come and go, right? So churn gets better, so to speak. LTV and LTV over CAC, so your customer acquisition cost definitely goes up for all the reasons I mentioned a minute ago. But your LTV also goes up. A, bigger tickets, and B, much more longevity, right? So once a large enterprise makes a commitment to use Box or to use Salesforce, to stick with those two examples, those are 10-year commitments. That's not stuff that they rip out after 2 years, right? So both of those numbers go up. So your LTV over CAC, it depends a little bit, right? It can trend the same, better or worse. It's a bit of a proportional question. And then your net retention rate is also going up, right? I mean, I think there's good statistics being published by folks out there, but I think, the SMB world, you're probably 80, 90% or so net retention. And once you go into enterprise, you're going to get that over 100, and, it should be more like 120 percentile or so.
Okay.
In that space. And like I said before, gross margin typically goes down because of the bigger part of services that are usually needed in the enterprise world. Not always, but in most cases.
True. So more services, and then also, I guess, higher CAC, right, on overall. So I think you're willing, as long as you're willing to invest that CAC, I think overall seems to be a better return in the long run, right?
Yeah, that's right.
Yeah. So looking at your website, your portfolio of companies you guys have invested in, you have different, great success stories as well. With your track record, obviously you have a great track record. Can you share maybe a few mistakes, right? That's all things that we want to learn, mistakes that companies make when they maybe try to scale a little bit too early. And I think that's the part. People love the idea of scaling quickly, but if you scale too early, I think there's this, could go wrong as well.
Yeah, I think the number one thing that we find advising founders on portfolio, or just in general as we speak with people, is scaling your sales organization prematurely. And I think that is, the larger I think your customers are, the longer your sales cycle, the more complex that is, the more true that is, right? So if you have something very transactional, very simple, fast sales cycle, then it's easier to ramp and experience and see where that goes. But if you have a long sales cycle and complex sales cycle, and if you start throwing bodies at this too quickly, it takes a long time for you to figure out that it doesn't work and it doesn't scale, and that's very expensive, right?
Yeah.
So, for example, you have a company, and you have the founding team, you have 2 salespeople.
Yeah.
And under the direct supervision, if you will, of the founders, and that works, and you're like, okay, we got it. Now let's hire 7.
Yeah.
Right. Finding the right +5, right? And actually understanding what's going on and what's going wrong and what's going right. What's going, especially on what's going wrong side. It becomes very opaque and very hard, right? Because you really need to understand who is the ICP, the ideal customer profile, who's the buyer, how do they buy, what are really the solution requirements, and sort of the whole solution, right? Not just here's the product, but everything around it to make it something that's really adoptable and can be successful. Competition, where do we really differentiate? Not just our marketing material, what we think it is, but what is it really in the customer side? All these things take time, right? And I've seen too many founders, out of their, boundless optimism and sometimes a lack of experience. They're like, okay, we want to grow fast, so we can, each rep can do this many deals per year, so therefore we need 8 reps. That's higher. And not wait long enough until you really have figured this out, and you can sort of tell, if I add 1 more rep, it's going to actually add this much more in net new ARR every year. And once you get to that point, then you can carefully grow into it rather than just go fast. And I think the other one that's a little bit more nuanced there, but there's a very important transition that goes on in that early stage as you grow that team, which is the transition from founder-led sales to sort of sales-led, right? Professional sales organization. Exactly. And many founders totally underappreciate how important they personally a role they play in the sales process, how much those early customers love sort of the cachet of dealing with this young, vibrant CEO, and she is just awesome, and I'm really buying from her, right? And the moment she steps away from it, it becomes a very different dynamic, and the sales process changes, right? Exactly. And since they need to deliver numbers and the board's on their case, right? So she or he, whoever the case may be, they continue to, be in every deal and don't realize that as long as that's the case, they're not ready to scale. You have to first, with a team of 2 to 3 reps, prove, ideally with a VP, player coach, head of sales with 2 + 2, maybe 3 reps for a year or so, prove that this really works and you don't need to be much involved. And then that now I can start adding more people to it. But if it's always centered around you as the founder or the founding team, it's really hard to scale.
Yeah, absolutely. I mean, you can't expect the same results from be you as the founder as your first hire, right? And it's going to take time before you can hopefully replicate the results that you got yourself, right?
Yeah, for sure.
Yeah. And then speaking of some of the companies or portfolio companies that you've worked with or you partnered with or invested in, can you talk a little, maybe share an example of maybe how you helped them form that strategy for that upmarket transition, and maybe what was the result that you guys have seen from doing that?
Yeah. Let me see. So maybe a good example is a company called GoForms.
Okay.
So they're in the digital mobile forms space. And we invested in them quite a while ago. They very much started with small companies, not even mid-market, just really SMB. And it's a PLG model, right? So business freemium. It wasn't called PLG when they started, it's business freemium, but it's basically a free plan for, this many users, this many forms, what have you. And then, tiers of different fee arrangements on top of that for those who really like the solution and want to grow it and use it more and so forth. And so, we spend quite some time helping them through like perfecting the model, the PLG model, the product itself. I mean, it's a very unique sort of solution because the form is exactly like whatever your PDF looked like before. Now it's going to look exactly the same. Only it's a digital form that you can fill, which makes the adoption in the field so much easier, right, than something that's different. So getting that right, and then finding traction. Like, what are the verticals? What are the kind of companies? Who is that buyer title that really gets it and wants that and needs it and will grow it? And so, for example, they've hadn't had much success or are having much success sort of in construction and general sort of field service, things like oil and gas and things like that.
Yeah.
And, now they are, the leader. If you look at the G2 quadrant, right, the leader of the mobile forms market, and are growing really nicely. They've got, wonderful KPIs. If you look at their LTV over CAC math, it just looks awesome. And with every dollar invested in sort of marketing, it just pays dividends, and it's a great sort of flywheel thing. And back to your theme of moving up market, right? Without necessarily a conscious, okay, let's change everything and move up market kind of decision. They're starting to see more and more mid-market customers, big enterprise customers. They've got like a whole stable of customers where, like 6-digit annual, ACV numbers. That all started with just PLG, use it with 5 users and grow over time. And that's kind of things that we do, we've experienced with. And it's definitely a great success story. And we are very excited about what will happen to them over the next, 2-3 years for sure.
Yeah, you gotta love those type of those kind of inbound requests of those enterprise companies or mid market to come in and they just try it without any kind of sales interaction, and they over time just organically grow and become a 6-figure user, right? You gotta love those.
Yeah, for sure.
So I'm just checking this out. Yeah, goforms.com. Yeah, great, looks great. And then kind of the last question I had before we move to the more personal rapid fire questions part of the interview, which is I know we talked a little bit about maybe issues or things to think about if you try to scale your business too early. But do you have any other tips or maybe mistakes to avoid for some early stage founders if they're looking to scale their company and they're ready to go up market in the future and maybe think about when is the right time when it comes to that time for their business?
Yeah. I think I'd say this. First and foremost, I think don't worry about, enterprise versus SMB versus whatever. Start with really thinking about what is the problem I'm solving? Like, do I really understand it? And where is the right sort of, head pin, if you will, from a types of companies, types of buyers that have this problem and gravitate to using new technology and adopting new technology, not being risk adverse. And let that make that decision for you, right? And if you are a, Workday kind of company, when they started, and it's just the right answer to start with large enterprises for, a host of reasons, and that's what it is. And then that's great. And you can be spectacularly successful with big enterprise customers and maybe never leave that space.
Yeah.
Or if you find out that, the nature of the problem you're solving is just such that, you find it much easier to start with small companies and be successful there, then that's what it is. Right. So, so don't get too much in your head over the like up market, down market, whatever. Like what's the right thing to do, right? For this problem, for this business I'm trying to build.
Right.
And then I think, be cognizant, right, of some of the things that we just talked about in terms of limitations and challenges along the way, right? So, for example, I would say if you are ending up starting with more on the enterprise side, be very careful in what customers you pick, specifically if they're really big.
Yeah.
So, I always cringe when I see, early stage founders, give me a call and all excited about their very first customers, Walmart, right? Or something like that, right?
Yeah, yeah.
And as beautiful as and as big as those companies are, they can also sink you, right? Because you'll end up building a product that's basically just for them. But how many more Walmarts are out there? Like how many more customers that have exactly the same problem and can be solved the same way? So just be careful there, right? And I think if you end up starting more on the SMB side, just think scale, think automation, right? Yes, early on you could do a lot more things manually, but you're very quickly going to run into brick walls, right? Because in order for that to work, you need to onboard hundreds of customers every year, not thousands, right? So you need to just do this as streamlined as possible. So get that into your mindset and into your team's mindset early on.
Yeah, that's fantastic advice. Yeah, I remember that, getting that first, enterprise client, years ago in the first SaaS company I advised with. And yeah, they asked for a proof of concept and, team's all excited. And yeah, but then you end up building for their team and then one department. And then all of a sudden you're stuck into the, a different business than what you thought you would, right?
Absolutely. Yeah.
Yeah. Cool, Andy. This has been fantastic advice. I mean, I appreciate all you shared here.
Gladly.
Yeah. Ready for the rapid fire questions?
All right, hit me.
Yeah, let's hit it. All right, let's do it. Okay, so what's one activity you enjoy outside of work that you say gets you into flow state?
I love being outdoors, and whether it's hiking or skiing or whatnot, I just love the outdoors. But I think more than anything else, from this flow state, I love endurance sports, and I swim a lot and I run, but biking by far is my number one. Like I love to be on my road bike, and here where I live, lots of nice hills and beautiful roads, and it just gives me a lot of peace and space to think. I love that.
Yeah, I'm with you. I love biking as well. That's awesome. What's one piece of advice, Andy, you wish you had known, and if you could go back, you would tell your, let's say, 25-year-old self?
Okay, where do I start?
A list of that.
Yeah. Well, I think, let's see. I think one that comes to mind here is, if you'd met me at 25, I was hyper focused. My friends always make fun of me. Hyper focused, super intense as a person. And knew exactly what I wanted to do, and that was only one right way, and that was my way, and go, right? Yeah. And I think over the years I probably mellowed out a little bit, but I would give myself the advice that your peripheral vision is really important, right? So what's around you, like what you learn along the way, and that's sort of not directly within focus, and who you meet, and how these people may become really influential in your life later on. Yeah, is actually worth spending more time and capacity, brain capacity, and everything else on than I ever did in my early years. Yeah, fantastic. I love it. What are some of the biggest challenges you guys are currently facing in order to continue to grow your VC firm, Cloud Apps Capital Partners? Meaning, I don't know if there's anything that keeps you up at night these days when it comes to investing or looking at deals or what? Yeah, let's see. So I think, like I said, we were super excited about the market. I think that's really a bright spot for us, and we're excited about what lies ahead and the investments we already made this year. Keeping up at night is probably too strong, but the things that are sort of on the watch list are it's a little uncertain right now, just economically, of how the biomarkets will develop, right? I mean, we had like this huge burst of like everybody needs to digitalize everything.
Yeah.
So now maybe there's a recession, maybe not. We'll see how that behaves, right? So we're thinking and working with our portfolio companies around how much caution to put into their plans for that. And then the second one is just follow-on financings, right? So we lead the early Series A, the classic Series A. Yeah. But then there's like B's and C's and D's come after us. And we have a great, beautiful network of firms we work with that we appreciate and they appreciate us. A lot of those firms are, in a position now where they have to be cautious, right? They invested, in high valuation companies that don't really have anywhere to go right now. So the market's all gummed up. And so making sure that starts flowing again, that capital, and our portfolio companies can all get follow-on financings and continue to grow is another thing that we spend time on and is on the watch list.
Okay, fantastic. And who or what are the best resources? Let's say three. It could be books. It can be people, mentors, or maybe people you follow in the space. Who you'd say have been kind of the most instrumental to your success over these last few years, whether in investing or in operations?
Look, I've been blessed with working with amazing people throughout my whole career, and I think sometimes there were rather explicit mentors to me, and that's sort of acknowledged. And sometimes I never knew that they were mentoring me, but I was borrowing and looking and watching. I've always sort of been fascinated by seeing what other people do, how they do it, how they're different from who I am and how I do things, and sort of borrow and steal and emulate, if you will. Yeah. But one thing I think I've found for myself over the years is that at the end of the day, you just have to be you, right? You have to trace true to yourself and know and understand what your style is, and not overthink okay, is that the right way or the wrong way? But just be authentic about it and be true to yourself.
Exactly. Yeah. Just what do you really want, right? And not what
right.
It looks like success or what what everybody else says is the right way.
I think there is sort of a tendency to think that there's a right or wrong in certain things. Like how should a founder of a SaaS company be, right? In terms of behavior and appearance and demeanor and all these things. And it's just that's just the wrong way to look at it. It's like who are you, right? And how can you apply your strengths and your character traits to the task at hand? And there's a million different ways to do that. And I think that confidence of just, being yourself and making the most out of that rather than trying to play a role, someone you're not, I think that's key.
I imagine you being in the Bay Area, you might see a lot of those, there's like a replication of how, what the ideal person looks like as a founder, and everybody tries to replicate.
Yeah, there's a little bit of that going on for sure. Yeah.
Yeah, it's all right. So obviously you've had, great success in your career and where you are today. So, things about this definition of what I'm about to ask you probably has changed over time, but, today, what does success mean to you today? And it could be either personally, business, financial, life. There's no right answer, but how do you define it?
Yeah, it's, to some degree, it kind of comes back to what we just talked about. I mean, to me, success is like, first and foremost, just, be happy, be healthy, right? With your life and what you're doing, right? And everything else is just, sub to that. But my teenage kids, they say this thing, and others will probably laugh when they hear that, but they say, "You do you," and they typically say that when they completely disagree with what I just said or what I'm doing. In a sort of slightly passive aggressive, like, okay, you're a lost cause. We'll give up on you. So you do you, Dad. Okay, but secretly to me, it's almost become like my secret mantra, which is like, be true to yourself. Yes, I'm going to do me, right? You do you. And be happy with that, right? Find what makes you happy, and and whatever mix of personal, professional, financial, what have you, right? Is all these things matter, right? But they're different for everybody, and you just need to figure it out for yourself and go with that.
Yeah, perfect. Yeah, be yourself. That's success. Yeah, love it, Andy. This has been great. Just to kind of wrap this off, if founders are looking to get in touch with you, learn more about you, your VC firm, or they're maybe looking to pitch their company for investment, where's the best place to go or get in touch with you?
Yeah, so I think there's two obvious ones, but I think they are the best ones. Like one is LinkedIn. So you'll find, me on LinkedIn very easily. And there's also a lot of resources out there. I do write a bunch of articles, about these kind of topics. Actually, the one that we just talked about here about upmarket, downmarket, I wrote a whole paper on this a couple of years ago, I think. That's all out there. So you'll find me there. Just, follow me if you want to learn more, or just contact me if you're interested, if you think like you have a business that kind of fits our theme and need a partner that, is like us, like that has operating experience and can be committed to the long-term success. Just find us there. And then our website, CloudApps Capital Partners website, which you'll also find quickly, has, lots of more information about us, the portfolio, our success stories, who we are. And I think those are probably the two best resources.
Okay, awesome. So I'll add your LinkedIn profile and the website to our show notes. So if you guys want to check it out, feel free to reach out and check out more about Andy. Awesome. Thank you so much once again, Andy. Appreciate you jumping on the SaaS District show today.
No problem, Akil. It was great fun. Thank you for having me.
Thank you. Bye-bye.
Thank you all for watching this episode and joining SaaS District today. Don't forget to like, subscribe, and hit the bell for future episodes where we interview top leaders in the SaaS industry. If you're a SaaS company looking to grow and unlock the true value of your business, get in touch with us at Horizon Capital, and myself or one of our consultants will provide a free assessment to help you get there and hit your goals. If you have any feedback or suggestions for this podcast, please comment down below and help us improve our content for you all. Thanks again, and see you on the next one.